Hi everyone, I'm attorney Aiden Durham with 180 Law Co. in Colorado. Welcome back to All Up in Your Business, where today we're going to talk about something very important that's going to impact probably all of you small business owners. That is, of course, the Corporate Transparency Act. I'm going to tell you what it is, what it means, who applies to it, what you have to do to comply with it, and what happens if you don't. But first, if you are new to All Up in Your Business, welcome. Please subscribe and click that little bell so you get notified anytime I post a new video. You can check the description as well for links to additional information and resources. And while I am a lawyer, I am not your lawyer. The stuff I talk about in this video is not a substitute for actual legal advice. If you need help with any legal situation, including complying with the Corporate Transparency Act, you should consult with a lawyer who's licensed in your state. Okay, so first let's do just a little kind of basic overview background of what the Corporate Transparency Act is. The Corporate Transparency Act was enacted in January of 2021 as a result of the Anti-Money Laundering Act of 2020. And it was introduced as an effort to try to cut back on things like money laundering, fraud, corruption, and other like financial crimes. Hi Birdie, what's up? Thanks for joining us. Hey, sweetheart. And it's really meant to kind of prevent fraud and some of these crimes and misuse of corporate and company structures by requiring certain entities to disclose information about their owners, people who have a beneficial interest in that company. Basically, in a nutshell, companies have to report the name and info of anyone who has a beneficial interest in the company. And we have to report that info to FinCEN, which is the Financial Crimes Enforcement Network. FinCEN. All right, enough with all like the background stuff. Let's get into the more important, like how do we actually do this thing? Number one, when is this going to come into effect? When do we start have to complying? January 1st, 2024 is when the Corporate Transparency Act comes into effect. Existing companies, so a company that is already formed prior to January 1st, 2024 will have 1 year, so until January 1st, 2025 to comply. Any new companies, any companies that are formed after January 1st, 2024 will have 30 days to comply. So, okay, the big question probably on everyone's mind is who has to comply? Is this going to apply to me? Am I, as a small business owner, going to have to do something about this? The answer most likely is yes, it's going to apply to you. Yes, you are going to have to comply and report to FinCEN. Who exactly has to comply with the Corporate Transparency Act? Any reporting company. Reporting companies have to comply unless they fall under an exception. What is a reporting company? Basically, it's any entity that is formed by filing a document with the state. Any entity, what's the exact language? It's something like any corporation, LLC, or similar entity created by filing a document with a state or Indian tribe or formed in a foreign jurisdiction and registered to do business in the U.S. through the filing of a document with a state or Indian tribe. So again, really any entity that is created by filing a document with the state. That means that's your LLCs, that's your corporations, that's your PCs, your professional corporations, your LLPs, your limited liability partnerships. Any company entity that is formed by filing a document with the state is going to be a reporting entity and will have to comply unless there's an exception. Does your company qualify for an exception? Probably not. There are 23 statutory exemptions for things like banks, broker-dealers, insurance companies, public accounting firms, tax-exempt entities. Pretty much any industry that's already regulated by another industry is going to be exempt under the CTA, the Corporate Transparency Act. That's kind of an easy way to think about it. The other exception is for large companies, which are companies that have at least 20 full-time employees and make gross sales of over $5 million in a taxable year, and have a physical office in the United States. So those 23 exemptions, or, well, I guess this large company one. So those industry exemptions or this large company, which again, most of us small businesses probably won't fall under that. A physical office in the US, over $5 million in gross sales, and at least 20 full-time employees. And also inactive entities are exempt from it as well. Okay, so that's the first question we have to ask ourselves. Is my company a reporting entity? The answer for most of us is going to be yes. All right, we know we're a reporting entity. What do we have to do? We have to report all beneficial owners. Hey, sweet birdie. Yeah. Okay, cool. Who's a beneficial owner? What does that mean? A beneficial owner is any individual who exercises substantial control over the company or who owns at least 25% of the ownership interest. So beneficial ownership will be based on control and ownership. The ownership part of it is, I think, pretty straightforward. If you own 25% or more in the company, you're a beneficial owner. The substantial control part is a little less straightforward. Pretty much this is going to be any senior officers like president, CEO, CFO, things like that. Anybody who has the ability to appoint or remove a senior officer or someone on the board of directors, or anyone who is involved in important decision making in, the business or finances or kind of the overall structure of the business. So if we are a reporting entity and beneficial owners, those beneficial owners will have to be reported to FinCEN in order to comply with the Corporate Transparency Act. So let's go through a few examples, make it, illustrate this a little bit, put it into some more context. So let's say, for example, the reporting company is an LLC. Individual A, maybe for Aiden, is the sole member of the LLC and makes all of the important decisions. No one else has ownership or exercises any control of the company. Question one, is a reporting entity. It was an LLC, which was formed by filing a document with the state. So yes, it's a reporting entity. Who are the beneficial owners? That would be A for Aiden. I'm the only owner, so I have 100%, which is greater than 25% ownership, and I'm the only person who makes any decisions. So in terms of ownership and substantial control, I come into that as the only beneficial owner. Another example, let's say again, the company is an LLC. Individuals A and C are the managers of the LLC. Individual A also owns 50% of the membership interests in the LLC. C does not own any membership interests, but there's a third person, party B, who owns the other 50%. And B is not a manager. So again, are we a reporting entity? Yes, it's an LLC. We are a reporting entity. A owns 50% of the ownership interest and is a manager. So under the percentage test and the substantial control, substantial ownership part, A is a beneficial owner. B is not a manager, but B does own 50%. So again, B is also a beneficial owner. And finally, C doesn't own anything, but C is a manager and exercises some form of control over the company. So in this case, all three individuals, A, B, and C, are going to be considered beneficial owners. Last example, let's say the company is a corporation. A owns 50% of the stock or the shares of the corporation. B owns 40% of the shares, and C owns 10%. Then there is a fourth person, D, who is the president of the company but doesn't own any shares. So 4 folks, A, B, C, and D. Without any other facts, we know that A, B, and D are beneficial owners. A owns 50%, that's more than 25%. B owns 40%, which is also more than 25%. And D is a senior officer, the president. So he or she, D, has substantial control and by virtue of that is also a beneficial owner. We're assuming that C doesn't have any substantial control. All we know from these facts is that C owns 10%. 10% is less than that 25% threshold. So C, in this case, is not a beneficial owner. There are a few few exceptions to beneficial owners not having to report, or who isn't a beneficial owner. One is employees. The employees are usually exempt unless they are a senior officer. And same with minors. If there's a minor who has some kind of ownership in the company, they're exempt as well, except in that case, their parents or legal guardians may still have to report on their behalf. There's also going to be a requirement for company applicants to report. The company applicant is the person who files the document with the state that creates the entity, or the person who is in charge or in control of that filing. So for a lot of us, if we DIY'd our, let's say, LLC formation and we formed the LLC on our own, we filed the paperwork on our own, we're going to be the company applicants in that instance, as well as the beneficial owner, since we are the owner. In a lot of instances, that might be an attorney. If you had a lawyer file the document on your behalf, then the lawyer, much to our collective chagrin, is going to be the company applicant. Potentially, if you used a filing service, an online filing service, and they filed on your behalf as well, then they might be the company applicant too. Okay, so now that we know that this is most likely going to apply to us, small businesses, where especially single member LLCs, where we are the only beneficial owner, this is going to apply to us. What do we actually have to do? We're going to have to file a report with FinCEN. As of the date of filming this, that report isn't available yet. We don't know exactly what that's going to look like or exactly how it's going to go down, but it's going to be some kind of form or report that we will electronically file through the FinCEN platform. There is some kind of preliminary info about it available online. The URL, I think I'll post it if it's incorrect, but I'm pretty sure it's fincen.gov/BOI. That's probably it. So anyway, we're going to have to file these reports. What are we going to have to include on the report? Some company information first, the legal name of the company and any trade names or DBAs. We're going to give the address of the company, the jurisdiction where it was formed, and the EIN or tax ID number for the entity. And then as far as the beneficial owners go, we're also going to have to provide the full names, birthday, address, and either license or passport, some kind of government identification info as well. So all that info for the company, as well as all that info for each beneficial owner. Another important thing to keep in mind, of course, things change within businesses. Businesses change hands. Someone leaves or enters as a new owner, or, you know, the president resigns or withdraws and we appoint a new one. Changes happen. And we're going to have to report those changes to FinCEN within 30 days. So after we do this initial reporting, if there are changes to the beneficial owners or to the company information, that stuff is going to have to be reported as well within 30 days of that change. So finally, okay, we know what we've got to do. What happens if we don't? Are we going to get in a lot of trouble? Well, potentially, yeah. So penalties for not complying, there can be a daily fine of $500 per day for as long as the violation continues. So that in itself can get pretty hefty. Even worse, willfully providing false information or failing to report complete information. This could result in fines of up to $10,000 and potentially even up to 2 years in prison. So I can't stress enough. It's important. We're going to have to do this. We're going to have to do this, you guys. Luckily for any of us who our businesses are already in existence, we're going to have a full year to comply with this. I suggest not waiting until the last minute. You know, get on it as soon as you can. Talk to your lawyer. Get a lawyer to help you with it if needed. Do that relatively soon. And the new companies that start January 1st, 2024 and beyond, it's really important. You want to make sure you comply with this in a timely manner. So again, working closely with a lawyer is going to be your best bet in making sure you do it correctly. That's all for this episode, folks. If you learned a thing or two, which I hope you did, give me a thumbs up. Make sure you subscribe and click that little bell so you get notified when I post a new video. Check the description for links to additional information and resources as well. If you want to learn more about, maybe you're just now starting to learn about the Corporate Transparency Act, and you're just now starting to learn about like LLCs, and maybe you didn't know that an LLC is one that is formed by filing a document with with the Secretary of State. You're in luck. I've got another really good video with a lot more information specifically about LLCs, so you can dig a little bit deeper into the fun world of LLCs and starting a business. You can check that out right here, and I will meet you over there. Thank you so much for watching. I'm Aiden Durham, and I'll see you next time. Good job. Meow.